In Stacking Up today, Joe Cusick of the Cusick Group joins me, and our traders setting up for potential rate move, do you think?
Statistically, no. But emotionally, yes. I mean, what we really want is we want movement. This has been extremely frustrating as far as the trade's concerned. Been narrow ranges across the board. It doesn't matter what asset class or what sector you're talking about. So at this juncture, just getting some volatility in this market would be very welcomed.
Now, one of the stocks you're watching is JP and this is a play that people were putting on ahead of Janet Yellen's comments on Friday. So what do you see happening here?
You know what? I think right now you're seeing that financials in general have been the leaders. They've been the laggards and been just basically beaten up the last couple months. With the potential of a rate hike coming before the year's end, there's some positioning going in on the bullish side, especially at these levels across the board. And we're not only seeing that, Angie, by the way, in U.S. domestic banks like JP and Bank of America, but we're also starting to see it in full throttle up in Canada as well. So the Canadian banks like BMO and so forth are really seeing that leverage. So again, we'll watch this closely. In the options world, we've been seeing a lot of upside out of the money call activity. Very interesting to keep an eye on. It's just an indication that people are willing to play the upside with fixed risk, but they're not yet ready to buy stock outright.
What do you see happening in Yahoo?
You know, Yahoo's another one that I've been keeping an eye on. I think that Yahoo could get some volatility, especially with tech. If tech doesn't lead to the upside, and you know, we've talked about this in the past, the NASDAQ has had a very difficult time breaking through its tops. Yes, it's come very close to breaking out. It gets to new highs and then pulls back. It's been hitting this ceiling. I think tech right now could be in a little bit of a mixed area, especially if we start to see that the consumer around the world starts to pull back. That means that if the consumer's pulling back, ads could be pulling back. You know, companies advertising. Yahoo makes a lot of money from advertising. Seen some put activity in there. Short term, so it's basically in that September range. But that looks like there could be some potential hedging going in, even though the market could continue to the upside.
What do you think about Procter Gamble? A lot of people have been going for these dividend plays. Is this going to be a winner for long-term investors, do you think?
Yield, and more yield, right? If you see anything that basically has a dividend yield that's over 3%, they're going to be in play. Especially with the uncertainty of what kind of tool the Fed's going to come up with to basically continue this stimulation. If they raise rates, yes, you'll start to see that fixed income will start to get into play, but right now, yield. Procter Gamble right now looks like it could potentially play to the upside. You're seeing some strategists that aren't really looking for the yield, but that upside potential, especially into what the Fed speak is doing right now. They're playing for a pop there. I think once you see institutions buying more of this stock, that's going to give you an idea of what the pulse is as far as if they're going to continue to go to the upside.
We will be watching. Thank you, Joe.
You're welcome.